good morning. And what an inspiring talk by Mr. Savni. What I'm taking back with me is look for pain. As painful as that sounds, that really is the holy grail. Look for pain and try and solve it. My name's Kamlesh Bhatia. I lead innovation programs for Amazon Web Services here in India. I work with large and mid-sized enterprises, helping them sift through, solve some of their most pressing customer and business challenges. And in doing that, bring to them innovation that they have not been able to do in-house. And a big part of that conversation essentially is about bringing startups, a lot of the value that is being created in the startup ecosystem to the enterprises. Sometimes I think my job as bringing enterprising to enterprise, but also the other way around is equally interesting about bringing enterprise to enterprising. As startups start building their businesses, they look for best practices in terms of what it takes to scale these businesses as they grow. So as we do that, and doing this on a platform that powers nearly 70% of the startups here in India, we look at this as being exciting, but also humbling at the same time. Exciting because technology is being used like never before, be it about data, be it about AI, ML, cloud, security, DevOps, you name it, and there is just so much of it in use today that it absolutely is the force multiplier in creating new outcomes. The second one's why it's humbling is because this is now solving real grassroots challenges. So you heard from Mr. Savni is India is a place where you don't really need to look for pain. There's pain everywhere if you think about it like that. But a lot of the startups are solving real grassroots challenges. So be it in the area of health tech, ed tech, or even in terms of helping us all be more sustainable as a community, all of it is out there. The discussion that we're going to have, and I have a really interesting panel with me here today, people who are not just looking at this startup ecosystem evolve, but they're the ones who are putting their money where their mouth is. So I want to maybe just quickly go around and introduce everyone. To my right, I have Shweta Bhatia. Shweta is partner and head of technology, investments India at 8 Road Ventures. Shweta, welcome. We have Alok. Alok is operating partner and chief operating officer, General Atlantic India. Welcome, Alok. And we have Amol as well. Amol, Director Investments, Omidyar Network India. So welcome, Amol. Shweta, maybe you want to kick off with yourself. And we just heard Mr. Savni talk about this, talk about how startups are really going to start changing a lot of stuff that we're seeing in India. Just paint for us a bit of a macro view here over the last decade in terms of the opportunities, the outcomes. What has this meant in terms of the value creation overall in context of the whole startup scene that you're seeing?
Yeah, sure, Kamlesh. I think that the last 10 years has really been a very spectacular time for India, right? And I'm not exaggerating. It's really the case where you saw the confluence of several sort of enablers coming together in a way that none of us could have predicted. And this has happened not just for the India consumer tech businesses, but it's also for India building products for the world. So India, doing really well on the IT services side. Of course, that started happening in the 1980s. But in the last decade, you saw a lot of that IT talent, us, knowing several verticals globally, industry verticals, and what their pain points are. And really entrepreneurs, leaving those companies, starting out, building real products, battle testing those enterprise-grade products, and then really successfully selling them in the world, right? And so what started with, look, we're going to compete on cost, we're going to compete on customer service, customer success, really great implementation. In the last 5 to 7 years, then converted into, we're going to create, world-class category-creating products, scale these companies to 100 million plus, and we've seen this across, right? Whether it's, and some of these are our portfolio companies, whether it's contract lifecycle management product, iCertis, whether it's, one of our companies in the customer engagement area called MoEngage, which works with AppsFlyer very closely, for example. So these were all products built in India, but succeeding in selling globally, which I think is a really big development for India. Of course, on the building consumer tech for India, again, you saw a lot of deepening in the sector, a lot of maturing in business models where, similar to what was being discussed earlier, you saw businesses which were, India-first businesses solving India-first problems in a way that resonated with Indian customers. And then that really proliferating at scale, right? We're talking hundreds of millions of users using these products, whether it's for e-commerce or payments or insurance or how you buy equity stocks. It's really all over, right? And it's not just B2C, it's B2B too, right? Old school B2B small businesses, which 5 to 7 years ago, everybody said, look, it's a real struggle to bring them online, whether it was demonetization, whether it was some of the COVID effects. Now we're seeing B2B commerce come alive in the country in a very big way as well. So as a result, what you're seeing is, all of this come together and India truly, occupy its space in the startup ecosystem globally and really emerge as one of the largest ecosystems. And of course, the other force that really helped to sort of multiply these effects was global capital recognizing this opportunity in India and really supporting that growth, whether it's through venture capital for early stage businesses or it is, the growth capital that some of the investors here bring to the table. Just putting it all together, it's really been quite an amazing run for India, and investors have seen, the benefit of it as well. And I would say, yes, globally, we're looking at a pretty tough environment financially at the moment. However, the confidence in India still remains at an all-time high, I would say.
You touched on an important point here, right? India for India, India for the world, right? Now, India for the world, as companies start maturing, they start looking at opportunities outside of India. What change does that bring in their operating and the business model? What level of maturity has to come in as you kind of take these businesses out of India and scale for the world?
So I think, interestingly, right, when we look at sort of mobile-first businesses, right, like MoEngage is an example of that, what we find is actually not a lot needs to change. If that product has been battle-tested in a market like India with hundreds of millions of users, right, it is usually ready for a mobile-first audience for sure. A few changes we've seen is that the developed markets are not as mobile, I would say, evolved as India is.
Counterintuitive, yeah.
So it is a little counterintuitive. So sometimes then you have to not just think about mobile. They're still, pretty big on email marketing and things like that. So how do you, and the world is a little bit moving towards, integrated tool sets, etc. So it's a little bit of how do you then marry where that customer is versus where your product is. I'd say that is one. And more importantly, sometimes it's just more about the packaging versus the product. So on the packaging side, I'd say it's really, talking to that customer, in that language that resonates. And many times it means hiring locally, hiring like a product marketing manager or building out a GTM team and integrating those cross-border teams. So it's more the go-to-market element that I think really needs to evolve as you start thinking globally.
That's fantastic. So another follow-up question there. You mentioned the level of optimism there is around what's happening in India right now. There's a lot of capital that's flowing into the country and really helping nurture a lot of this activity that's happening here. But we're also talking about the funding winter, right? I mean, that's coming through. There's a lot of skepticism in terms of what that's going to mean and how that's going to play out. Any sort of guidance, any tips you have for the builders we have here in the room in terms of how they should be looking at that, how they should be preparing for something like that if the worst was to happen?
So, interestingly, there's actually tons of dry powder still sitting on the sidelines to be deployed. So I wouldn't call it a funding winter. What I would call it is really a resetting of expectations, right? And what do I mean by that, right? Firstly, what it means is that the providers of capital globally, right? Whether it's in the public markets, whether it's in the private markets, through different asset classes, are, with rising interest rates, inflation, etc., they're just valuing cash flows differently. And what that means is the providers of risk capital just want to see companies getting to profitability, throwing out real cash a lot sooner. And how that really translates to you is that investors at all stages, right? So this is pre-IPO to like seed investors, will start asking questions a lot sooner on, look, how do you monetize this? What are the unit economics of this business? Not just at a customer level, but what will it take for you to get this business to a break even at a company level, not just at an EBITDA level, but also at a PAT level. So I think that is the mood of the day, and honestly, I don't see it changing anytime soon. So if you're an entrepreneur building a business, I think the belief in digital transformation, in the use of technology to transform traditional ways of doing things, that's not gone away. What's changed is, look, how quickly do I want you to grow versus how quickly do I want you to prove out, that this is a viable way of doing this. And in some cases, it means, before, what was good growth was 80%, 100%, 200% year-on-year growth. Now investors are saying, look, it's okay, 30 to 50% growth year-on-year is fine as long as you're doing it responsibly and it doesn't involve burning a ton of money doing that, right? And just the only other thing I'd say is that in the resetting of expectations, it's also, there was digital transformation and then there was COVID, and COVID did, accelerate a lot of it. But maybe, all of us got a little carried away in terms of what that would mean and what the new world order would mean, etc. And I think what we're seeing is, as things opened up, the customer is not fully digital either. The customer maybe wants to be hybrid. They want offline and they want online. And so as an entrepreneur, it's for you to also reset your expectations in terms of, look, where is my customer really and how do I meet them and how does my business model support that? And I think as long as you're proving all of those things out and proving them without, having a plan that requires burning a ton of money to prove it out, then there's plenty of capital, available to really, fund those proven out models, is what I would say.
Fantastic. Alok, maybe just taking a segue to you, right? I mean, the activity that's happening out here in India, right? I mean, what separates India from, let's say, other markets that you operate in? What's it from a DNA standpoint of India that really makes this exciting for an organization like yours?
So I would say probably three things. Number one is scale, right? India, the kind of scale India has probably is rivaled only by China. China, probably the productivity is slightly better than India's, but the kind of scale India has, and India has proven that again and again. If you look at the whole IT services boom that happened because India was able to provide people at such scale, and then that moved away from just staff augmentation or body shopping, if you will, to more managed services coming right out of India. If you look at the whole infrastructure that has been built, I think Mr. Sani touched upon it and other speakers have touched upon it. If you look at the infrastructure that's been built out in India from a digital perspective, whether it's the UPI, you look at the whole vaccination, the COVID platform, right? No other country can rival what India had been able to build. I heard a data point yesterday from somebody at the National Stock Exchange. I'm not 100% sure it's true, but it seemed plausible that 40% of global digital payments happen in India.
Yeah.
That's the level of activity
Over
that's
5
going
billion a
on, and
month.
that's the scale and infrastructure that is available.
Yeah.
So that's number one. Feeding into that is the skill availability.
Yeah.
Again, I was reading somewhere in the year 2020, 935,000 people or students registered for computer science and related courses. I'm sure in the last 2 years, it's grown to more than 1 million. So you're producing 1 million software engineers a year. So that talent availability that is there in India, going back to the first point again, is scale. Talent availability at that level. And I think the third is the business ethos. I remember a very senior person in the industry explaining this many years ago, that India has what is called the Anglo-Saxon business ethos.
Okay.
You won't find this in many other places. In India, if you come and shake hands on a deal, you can move on from there. That's not always the case in some of the other geographies.
Right.
I mean, I've worked across some other places. It's not as easy to do business in other places. Don't go only by ease of doing business sort of statistics. If you see on the ground, it's far easier to get stuff done in this country, the rule of law that operates, being part of that. But there's not, as they say, there's no wealth and nothing common in the Commonwealth.
Yeah.
But at least some of that legal system that works is familiar to a lot of people who are coming into this country to invest. And that gives a lot of sense of comfort. So I would say these three things will help drive a lot of investment coming into India, because you can do stuff here at scale. There is a huge amount of infrastructure. And then there is a familiarity with the way business is conducted.
Right. That's really interesting. If you sort of put the investor lens on, what are some of the trends that you are most excited about, let's say going into the next 2 to 3 years? What are you betting on?
So we fundamentally look at about 4 sectors: consumer, healthcare, financial services, and enterprise technology. So in the other 3, we'll say the technology aspects of those sectors sit within that. So consumer and consumer tech, healthcare and health tech, and so on. And these are the 4 sectors that we're hugely betting on. I think Mr. Sani also alluded to it, the whole healthcare system in India, the amount of private enterprise that is coming in. People are not necessarily only going to government hospitals. The healthcare infrastructure in this country, if you go outside of the cities, is still extremely weak. I found out firsthand. I had an accident in Pahalgam a couple of months ago. I went to the local primary health center because there's no hospital in Pahalgam. I had to go to the local primary health center. The infrastructure there was abysmal. Right? I won't want anybody to have to use that kind of infrastructure. Yeah. But I also see there's a fair amount of investment going in, and then there is obviously private investment going in. So healthcare is probably one of the biggest areas, and associated with that is pharma or health tech as well. So that healthcare piece. I would say enterprise technology, because end of the day, we still find that, I think Shweta alluded to it, unit economics, right? In consumer tech, unit economics is still unproven in a lot of areas. A lot of money has gone to a lot of business models where the unit economics are still unproven. Some of that is because of productivity on the labor side and infrastructure bottlenecks reducing some of that productivity. But end of the day, I think enterprise businesses have a far greater chance of bringing in unit economics and bringing in scale. So if you have good unit economics and you're able to multiply that at scale, you will always make money. An investor will invest only if they can make money out of it, right? To a certain extent, I've always been criticized for saying this, but I always say that a lot of investment happens on the greater fool theory. I'm a fool for investing, but I will find a greater fool to buy it from me at a higher price. That will go away. Beyond a point, that can't happen. So it has to be the unit economics multiplied at scale that will drive investments into any sector. Right. So if we look at those sectors in India, the enterprise-related ones, certain amount of consumer sort of sectors as well. Food, of course, big one. When I say food, not necessarily F&B, because again, their scale is difficult. It has to be a consumer goods, like manufacturers, owners of brands. They don't even need to manufacture it themselves. The owners of the brands. Financial services. There's such a massive infrastructure, and there is still so much left to be done, right? There's so much of untapped market. There are so many people who are still to be included in banking. There's so much happening on that. There is enough and more scope for it to expand. Even though 40% of global digital payments are happening out of India, there is still scope for it to increase so much more. So I would say these are the 3 or 4 sectors that we're most bullish about.
Well, the demand exists and you see there is no dearth of that, both on the enterprise side as well as on the non-enterprise side. How do you see companies organizing to service that demand internally in terms of talent? Right, that's one thing I hear most in terms of, do we have the right talent, or can we retain the right talent to be able to continue to do this? A number of your companies are in scale mode. How do you see that challenge being overcome?
Sometimes I see this getting a little exaggerated, to be honest. There is a huge availability of talent. It's not a question of quantity. I think it's still a question of quality. You may be producing 1 million engineers a year, but how many of those are of real quality?
Right.
I think the challenge is really about having people of quality and who have employability.
Right.
Because for that, you have to then go down into the education system and say, how do you improve quality of the people coming out of that system? It'll take time, right? I think it's better today than it was maybe 20 years ago. Yeah. I mean, I joined the IT industry in 2000, just before the 2001 dot-com bust. And every business and every economy goes through these cycles, right? So just like there is this cobweb theory of agricultural pricing, it takes 4 or 5 years to produce a good engineer, right? Yeah. And if the input into the system is, or rather influx into the engineering education is lower today, there will be a shortage 4 years later.
Of course.
You won't feel it for 4 years. So that time lag that is there, that sort of causes some of these swings. Beginning of this year, we couldn't hire people for love or money. Today, you will be able to find the talent because there's a saying in Tamil when you translate that when the tide goes out, you know who was swimming naked. So that tide has gone out.
Yeah.
We figured out who was swimming naked.
Yeah.
And now the tide will come back in again. So these cycles will go on. Yeah. You know, I look much older than I actually am, but this is what 9 years in PE does to you. I'm actually only 35. But, you know, I've seen so many of these business cycles. I'm always amazed how predictions of the future are straight line.
Yeah.
If you look at any graph, historically, it'll all have ups and downs. But when you look at how they're predicting the future, it's a straight line. So what makes you believe the future is going to be different from the past?
Yeah.
And every mutual fund ad you see keeps reminding you that, you know, past is not the same as the future. But typically pattern, you know, if you recognize patterns, the patterns really don't change. So everything will go through these cycles. So talent availability will go through cycles, money availability will go through cycles, demand and supply will go through cycles. There are aberrations that may come in. If there are lockdowns in China, then the supply chain gets affected. Then today, if I book a car, I can't get it for 6 months. Yeah. That's because of certain aberrations in the supply chain. But beyond that, everything will go through a cycle. There is always availability for good models. So a good business model will always find money available. Right. A good, well-run company will always find talent available. You have to look inward rather than outward and blame external forces.
Absolutely. That's fantastic. Maybe coming to you, Amol, right? This is about Bharat 2.0, and you're a company that invests in social ventures, right? I mean, you're the one who's closest to this in terms of what's really happening at the ground level. Tell us a few things that you believe in terms of key trends that you are most excited about in context of Bharat 2.0. You heard Mr. Sawhney talk about it. You heard Alok talk about, you know, healthcare that nobody would want to get to if it stayed that way. What are you looking at? What are some of the trends that you're most excited about in context of Bharat 2.0?
Sure. So just as a quick introduction, Omidyar Network invests globally in mass market businesses. We have deployed close to $2 billion globally. In India, around $500 million across 75 plus companies. To start off by Bharat 2.0 or Digital Bharat, let's be clear on the terminology, right? We use a different terminology. Google looks at it differently. Media portrays it differently. But let's say for the benefit of the startup industry, if we keep it simple, today, let's say there are 60 to 100 million unique users which drive the bulk of the digital economy. The 2.0 is going beyond that, right? In terms of the income pyramid, in terms of the regional focus, right? Moving from the top 8 cities in India to the other parts of the country. This comprises of tier 2 towns. This comprises of MSMEs, micro entrepreneurs, housewives. As far as ON is concerned, we define it as the next 500 million or the users who are coming online for the first time and hence will be exposed to the digital economy. So having laid that definition, the sectors that we are interested about and let's break it into, let's say, retail and business. Largely, we like to do business, but we also have a few of retail investments, right? And I was making some copious notes of the earlier sessions. I mean, those are very interesting. On the retail side, if I were to pick the top 3 sectors that we are most excited about, EdTech continues to be a big sector. Yeah. We are investors in Vedantu, White Hat Junior, but outcome-based skilling, education, social learning, like a Front Row or Air Black, these models continue to excite us. Health tech. Health tech could be in the form of, let's say, insurance plus managed primary healthcare or chronic disease management. That excites us. The third area I would say would be privacy and online security. Okay. At this point, we are largely restricted to KYC. How do we go beyond that? Predictive analysis, some kind of preemptive insights. I think that's what, as a firm, these are the 3 themes we are looking at as far as retail users or consumers are concerned. On the business side, the list is longer. Our most favorite theme currently is MSME digitization. Yeah. And this has various flavors to it, right? The simplest is demand and supply aggregation. We have been big fans of this. I personally have been an investor in both PVR and Book My Show, and it's an interesting story. PVR is a great brand. Most of us are patrons. But for it to get to $1 billion, it has to lay out 1,000 screens. And there's a Book My Show who rides on top of it, sells their tickets, but really aggregates both demand and supply, yeah, and is able to create the same kind of economics. I've seen that play out, right? So demand and supply aggregation is a big theme that we continue to play. Full stack models, cloud manufacturing. Once you have the demand, you know, in India, the supply is almost fragmented in every industry. Can you really do some smart tech play on top of it? In sectors where India is already strong. Could be anything, specialty chemicals, apparels, whatever is the underlying sector. That's the second theme which interests us. The third flavor here could be providing more transparency on the process. A buyer has so less visibility in terms of, okay, he has given an order, what's happening, when is he going to receive it, what is going to happen. So really simple tools which can give that kind of visibility, a Factory Plus kind of a model, for example. So these are the flavors in MSME digitization. Apply this across sectors. Agri, maybe agri today is where e-com was in 2012-13. Aqua, big sector. Cross-border. I mean, if we think the processes are inefficient locally, as soon as you try to move either goods or money across the border, it becomes 10x more complex. How do you solve for the documentation? How do you solve for the money flows? I think this is one theme which we really like, MSME digitization. The second theme I would say would be formalization of the informal economy, which would be, well, maybe informal is a wrong word, gig, creator economy, solopreneurs, micropreneurs, whatever you want to call them. Examples of these models could be, let's say, how do you build a Shopify for professionals? Or similar to a Fiverr model. Again, we have made some bets. One of the recent investments we did was Mistri, which is digitizing and formalizing the home carpenter chain. Again, huge market, 80% unorganized. How do you bring some kind of formalization there, right? So again, the story remains same, pick up large sectors and try to digitize the value chain, right, in that sector, right? The third segment would be EV. In that, particularly EV infra. I think EV OEM is probably a strategic stroke big boys game to play. But EV infra, which could be battery swapping, could be some kind of charging infra, IoT plays on top of this, or let's say developing a secondary market. All those themes are pretty interesting from our standpoint. And these are the themes that we'll continue to track for the next 4-5 years, where we feel Bharat 2.0 can play out, thanks to the open digital infrastructure, which makes a lot of these, I mean, National Logistics Portal, ONDC, digital commerce, all these are open platforms, right? You just have to build on top of this. Let's say if we fast forward 5 years hence, and we are talking of a 5 trillion economy, various people mentioned that we don't know whether that happens in 5 years or 10 years, but we do know it happens, right? And there is enough anecdotal evidence. Once the GDP crosses that inflection point of $3,000, $3,500, the consumption basket changes drastically. I mean, there are various Southeast Asian economies that we can look at, right? then India being such a big market, what kind of tech-enabled plays are possible? D2C brands, helping smaller regional brands go countrywide by leveraging on distribution economies. Again, we made an investment called Brands of Bharat, which would basically take a local wafer pan-India, right? Provide that economies of scale. Consumables, I don't know if you caught the reports on the smartphone market. Smartphone in itself is a 30 billion global category, and India apparently is 30% of it. Wow. Some reports said like between 20 to 35 years of age, 50% of the Indian population owns a smartphone. Yeah. I'm not wearing one, you are. So I guess it is true, 1 in 2. But
I said I was younger than I am.
Sure. So these are the plays, consumer plays, which we would also target maybe in the next 2-3 years.
One thing in Amazon, we are a firm believer of is that the customer is blissfully dissatisfied. Right? And if we don't push the bar higher, somebody else will. So that keeps us going in Amazon. But in that urge to get to that blissfully dissatisfied customer, you might end up jumping at whatever you have out there. With all the builders in the room and the kind of the opportunity that exists out there, what are a few things that you might want to sort of share with them in terms of what should you be looking at, right? I mean, it's huge, right? I mean, it's the Wild West, right? How do you get out there and find out what you need to be looking at more specifically? Where do you need to look for that pain, like Mr. Savni said, and then be able to go at it?
Sure. I mean, take it with a pinch of salt. An investor will never give a good operational advice. And one of my Portco CEOs says it's the theory of gods and dogs. You're a god till the time you write a check. Once you write a check, you're a dog. You can only bark. You cannot do anything else, right? Large segments are there. Most of the markets are still unorganized and fragmented, whichever sector you pick up, right? So going back to the basics, which Shweta and Amit had mentioned, Alok had mentioned, in terms of getting the unit economics right, not trading profitability for growth, I think is very critical. Yeah. Perhaps the only exception to that is if you're able to build a heavy user engagement, even then the money will follow. Either of the two has to work. Either you focus on your unit economics from day one, or you focus on user engagement, which will help you build that unit economics in the future. As long as your chosen segments are large enough, the growth will come. So don't trade profitability for growth. That's one. The second, I would say, is team and the ability to navigate the changing circumstances. Just to elaborate further, my observation has been the 0 to 1, people are very good at it. You figure out a problem, you figure out a solution which solves the problem crudely at first, you develop a PMF, you have a product or service out there. The 1 to 10, very few people are able to do. And it goes beyond the product there. It is really you having the processes to scale, having the processes to, I mean, it's funny how you start off with a product which gets good customer traction. As soon as you hit a scale, your customer satisfaction goes like this, right? Yeah. The customer engagement, onboarding. So I mean, these are like pretty simple things, at least to an outsider. I'm not an operator again, but somehow these get missed. Really building those capabilities for that 1 to 10, having the agility to pivot, that's it. I mean, just the basics really, nothing special in that.
That's it. Thanks, Amol. I think that's all the time we have. It's a 30-minute session, and there is just, this is like drinking from a hose pipe, right? But I'm hoping, you all will be around for lunch to sort of interact with the folks if they have questions. The title of this session was essentially the Great Startup Reset of 2022. From what I'm hearing, this isn't really a reset. This is just about recalibrating. This is about taking a pause and thinking through again in terms of what the new opportunities there are and how you are going to be able to service these opportunities. I want to end with a quote from John F. Kennedy. This is one of my favorite quotes. It goes like, if not us, who? If not now, when? So that pretty much sums up the opportunity that we have ahead of us from a Bharat 2.0 perspective, but it's all for us to grab and organize ourselves around it to make the most of it. So thank you very much for your time today. I hope you found the discussion insightful, and thank you, Shweta, thank you, Alok, thank you, Amol.